Hey, it's Clay Trader, and this will be a video chart on ticker symbol RXII. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to this time frame. I think does a good job of telling the quote-unquote story of the price, and then makes mapping out with levels of support resistance a bit easier to see. A lot of price movement in this one, obviously, today, and kind of a give or take in terms of, your feelings. I mean, if you bought right there as a day trader and wanted to sell within 11 seconds, then yeah, for you, the chart's looking pretty rough. If you care about more so the big picture of things, then yeah, the bulls can still build a higher base and therefore build, a longer term uptrend. So like I said, there is different perspective that goes into this. So the one level, though, that really stands out to me from a support standpoint, and I think everybody would agree on this, is right here at the 78-cent mark. Why is 78 cents so important? Well, again, I don't mean to insult your intelligence, but like I said, I think we all agree on this. The last thing you want to see the price do after a great move is go back to where it was. Because if a price goes back to where it was, well then by definition, it's no longer making progress. But that's what bullish moves do, is make progress. And that's where 78 cents comes into play. Any sort of closes below there, or worse yet, if the price separates to the downside, at that point in time, that's literally putting the price right back inside of this range where it was before the big price movement happened. And again, going back to where where the price was is not a sign of progress. And that's why I say, there is still big picture perspective, a chance, because the bulls could come down here, bounce around, and then head back up. And at that point in time, if you picture that as a stair step, and then the lows right here are stair steps, there would still be stair steps heading in the upward direction. Again, it depends on perspective. If you're a day trader and you bought right there, then you could care less about this stair step. So I'm definitely talking about things, from a grand perspective when I'm talking about that 78-cent level. But in my mind, 78 cents, definitely the must-hold level, no excuses at all. What about levels of resistance? So if this thing tries to bounce, where are some of these battlegrounds at? Initial hurdle for the bulls to try to fight back up above, we're going to call right there at the 90-cent mark. And then after 90 cents, next key level right up there at about 96. So 90, 96, initial areas of resistance. Yeah, up here, that's technically a level of resistance. But before you start talking about that one, bulls first got to clear these first couple bridges. Again, 90 and 96 cents. So crazy day, big volume. We'll see how this one unfolds the remainder of the week. One of the most popular questions I get is, hey, Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, by all means, click right there to get access to the guide. The guide itself is very short and to the point. And like I say, it is free. Thanks for watching. Have a good one.